Papua New Guinea's agricultural sector, once a vital contributor to national development, is facing severe challenges despite reports of high revenues in cocoa and coffee sales. PNG in focus. Real stories. Real people. The Marape Rosso government created 4 ministries in primary industries and launched the National Agricultural Strategy Plan 2023. However, a deeper analysis reveals declining exports, falling productivity, and growing structural inefficiencies, exposing a silent collapse behind rising commodity prices. PNG in focus. Real stories, real people. Recent data from the Bank of Papua New Guinea, Department of Agriculture and Livestock, and international financial institutions confirm a long-term decline in production levels. Between 2000 and 2024, output for key commodities like coffee, cocoa, and livestock diminished despite sharp price surges. In the coffee industry, prices surged from 6 kina in 2023 to 13 kina in 2025, yet production fell from 980,000 bags to 826,000 bags. Projections warn that further price drops could reduce annual production to 700,000 bags, highlighting sustainability concerns. Cocoa production increased from 40,000 metric tons in 2022 to 44,000 in 2023, but then dropped to 42,000 metric tons in 2024. Prices spiked dramatically from 300 kina per bag in January 2024 to 2,400 kina by July 2024, reflecting high market volatility. Coconut pricing doubled from 1 kina to 2 kina per kilogram, equating to 2,000 kina per ton, while rubber saw a modest increase. However, production levels for both coconut and rubber remain low, indicating underlying issues. The livestock industry has seen a significant collapse, with cattle herd numbers plummeting from 150,000 in 1990 to just 46,000 in 2023. New Britain palm oil and Ramu beef dominate with 28,000 cattle, leaving little room for small-scale producers. Other key stakeholders manage only 5,000 cattle, signaling an urgent need for reinvestment in the sector. Despite high prices, production levels are dwindling due to critical barriers like seed shortages for coffee, coconut, and rubber. High costs, such as cocoa seeds priced at 50 toa per seed in East New Britain, make them inaccessible for many farmers. There is also a lack of sustainable breeding stock for goats, sheep, and cattle, restricting industry expansion. The over-reliance on price spikes disguises these fundamental production crises, posing a significant threat if prices inevitably fall. Without substantial reform, PNG risks further contraction in agricultural trade. To combat these challenges, Papua New Guinea must adopt a pragmatic approach beyond symbolic policy declarations. Strategic actions include increasing research and development in farming innovation and expanding extension services. We must secure breeding stock and seed supply by investing in national nurseries, eliminate selective grant in favor of tariff exemptions and broad industry incentives, improve financial access and literacy to ensure effective utilization of farming loans, and invest in agricultural infrastructure, including roads, transport, and utilities for remote farming communities. Several policymakers and agricultural advocates have pushed for reforms, including Alan Bird, focusing on cocoa development. John Simon championed national agriculture programs, and Governor Haiveda engaged in various commodity expansion efforts. Other leaders spearheaded coffee planting initiatives and developed coffee purchasing strategies to support farmers. The future outlook for PNG's agriculture depends on long-term investment in productivity, sustainability, and market accessibility. While coffee production is expected to rise in some regions, efforts must prioritize farmer-driven growth over political credit claims. By July 2025, there were no concrete reforms in nurseries, seed distribution, training programs, and economic incentives. The future of Papua New Guinea's agricultural sector is contingent on real investment, not short-lived price booms. This is PNG in Focus. Subscribe to our channel for more in-depth economic analysis.